Unbiased Trading here, and today we're going to be going over how to create a setup using data part one. This will be I think, a three-part series, and this part is kind of just to go over gathering data and cleaning data, and I'll try to make it as digestible as possible. Now, for gathering data is the first crucial step in developing a setup. After all, you'll need data to back up and discover an edge in trading. Before obtaining data, you should play around with concepts and hypotheses you wish to test. This does not have to be highly detailed. It could be something as basic as, do all large caps with a gap up of more than 5% have a trend day in one direction? Now, this series will not cover idea generation in depth, but it will focus on how to use data to locate and explore edges rather than building a thesis to test. Now, if you'd like a video about idea generation, please leave a comment below and or tweet at me, and we can do a series about that as well, as I think idea generation is a really big part in trading, and I actually think that's kind of where the creativity comes into it. So, one, you need to think about what type of data you want to gather. It is important to consider that the type of data that will be most useful for your analysis, and here are some types of data you may want to collect. One would be price data. This includes historical prices, open, high, low, and close prices, as well as any relevant price patterns or trends that you're looking into. Now, this data can be used to identify general price movements and anything from macro edges, such as open to close, or more in depth strategies, such as intraday entries and exits. Now, keep in mind it is not practical to export 1 minute data into Excel, so you must be smart on what kind of data you'll need. For example, if you're looking for a retracement trade, you could create a filter that only shows the price after a 10% move up in 20 minutes, followed by a 5% move down, and then it will log the price that was at that value, so that you could simulate a breakdown trade, for example, because it could give you the relative high, the relative low, and that would give you a rough estimate of exploring that edge without going through all 1 minute data or making a custom script in Python to do that 1 minute data. Now, next is volume data. This includes trading volume, which can be used to identify buying and selling pressure. High volume can indicate strong interest in the stock, while low volume can indicate a lack of interest. However, I would say low volume can sometimes have some pretty huge edges. They're just not very scalable, so I do recommend always looking into some low volume plays as well. I also believe that breaking this down into every hour or half an hour throughout the day, as I do with everyone I work with when backtesting a strategy, can be quite beneficial. So you can see how volume is transacting throughout the day, and you can measure liquidity and potential liquidity constraints, and also how liquidity can change percentage moves in the stock, like if volume and percentage changes are like directly correlated for your setup, or if they're not. There's quite interesting things you can explore into that kind of data. Now, next is indicator data. So this can include a various amount of technical indicators using technical library Python, or if you're just doing it manually, then going through it yourself. You could use moving averages, RSI, Bollinger Bands, all those kind of indicators. Now, these can be useful to identify patterns and trends in data. However, this does depend on what you're looking for. So, for example, if you're including a slow EMA, it can be a great addition to see how it could maybe used as an exit point in a setup. So, how I would do this is I would log if the EMA was touched after high of day, and how far away it was, and the value of it, and the liquidity at that time. So that can give me a good understanding of, after high of day, do you have a good retracement down to it? Could I maybe take a short at whatever I classify as high of day at that time? All those kind of parts go into it, and they can give you very interesting median statistics to look at. Lastly, news and earnings. This includes news articles, earnings related to the stock or instrument you're interested in trading. This data can be used to identify sentiment and potential market moving events such as like CPI. Now, this does not apply to small caps as much, as finding news data for small caps historically is a bit difficult. But for large cap setups, this can be a great addition. An easy one to do would be if it beats earnings or not, and you can see how that reacts. And you can use price data and volume data with that, and you could actually make a quite interesting experiment or even setup with that just combination of data. Now, for the method of gathering data, so this could either be done manually. However, there are some big pros and cons to doing this manually. One is there is a significant time opportunity cost in my view anyway. Is it worth spending 20 minutes each day documenting every ticker or spending several hours combining through hundreds of charts to record in Excel? Keeping in mind, I think the biggest reason I would say for this is that all those hours won't be 100% effective. You might mistype a number, you might misread a number, and all those human errors are very common when you're tired and going through, hundreds of charts, which can be incredibly boring sometimes. Now, two, however, with manual gathering of data, you'll be able to record data points that are not currently available to the masses or to the general public, such as historical news or maybe float data or sometimes even I/O inside a ownership. All those kind of things you could track real time manually, and I do recommend doing it manually because I think those are quite useful data points. I just don't think. Um, I guess to some extent you can create a setup using those. Just depends how long you've been tracking it. Now, lastly, you can do manual data collection is typically limited in terms of the number of data points because your amount of data points directly links to the amount of time spent. So unless you're spending an unlimited amount of time, the amount of data points you'll be able to include is somewhat limited. Now, you can also accomplish gathering data through code or by hiring someone to help you create code, which will give you a lot more flexibility and scale in terms of how much data you can analyze, especially given how quickly it can be done. Now, one disadvantage for coding is that you must have a strong understanding of how to think in code in order to convert thoughts into code and logically walk through how it will be executed to get the desired result. As mentioned before, 1 minute data into Excel isn't really feasible, so you need to be smart on how you could take those ideas and then execute them efficiently. Now, also, as previously stated, some data points are not very accurate historically, and some are more difficult to obtain, such as like float data or institutional data. However, in my opinion, the drawbacks are well outweighed by the efficiency of doing it in code rather than manually. And if you ever need help with backtesting, please do not hesitate to contact me, as I've been very honored to work with some incredible traders at the moment. And I would love to aid you in backtesting a setup or even just creating a general data set for you to explore. Now, for cleaning and formatting data, for training data, it's crucial you're using accurate and reliable data. Now, I will say I give all my data sets a margin of error of around 2%, as most of the time that means out of like 5,000 samples, that's about 100 samples might have some errors or might be potentially off on some categories. Now, this is completely normal in my regard anyway. You can either remove these samples if you can locate all 100, or you can simply leave them because it might be more time consuming to locate all 100 of them that have mistakes. Now, some frequent things you should check for is duplicate data. This is where when you pull from an API, maybe it's copied the same day twice or something like that. And that's actually quite common, so make sure to check for that. And two, sometimes data has the wrong attached attributes. The most common being like date, or if there was some weird error on that day, it could have the wrong date, for example, and that is something you should check. There are multiple ways of checking it. I'd say there are some smarter and less efficient ways, but I would say the best one is just kind of going through by hand and checking a good amount of your data set. Now, second is determining how much data is missing and why is it missing. I remember being perplexed for a long time as to why the high of every hour in a particular data set of mine was n/a. And I realized it was because a lot of those tickers had gone into halts and there was simply no price data for that particular hour. Thus, it would give me a error message or an n/a. Now, there's many of these kind of nuance issues that will happen when you start getting into coding for yourself when using trading data, and those are kind of things you'll learn. And I think it's an annoying time, but it's quite fun to finally figure those problems out. And most of the time, once you figure it out, there will be another one that you'll run into. That's just kind of the way of coding. So make sure to go through your data and check through each variables to why it's giving you an n/a, and just see if there's a logical reason for it. And if there isn't, then maybe it is a part of your 2% of margin of error, or maybe it's something you really need to look into. Now, a very typical issue as well is data not being standardized. So be careful to check the formatting of your data and check how it is formatted. For example, some providers put 5.0, which would imply 5 million, while others would just put the full 5 million. And if you have that in the same column or data set, then that can really skew your statistics like a lot. So make sure to check what format they will be coming into your data set for, or even if you're doing it manually, make sure you're keeping the same format. as that can really fuck up your data. Now, lastly, be sure to save the new clean data set in a new file and rename, but have a copy of both just in case, because I do find sometimes you'll want to look back on why you made particular changes, and that can be very useful. Now, this will be a series, as I mentioned earlier. So before we click away, I tried to make this part more digestible as I knew there was quite a lot to cover for gathering and cleaning data. But the next parts will be more about finding macro edges and trends in data, then defining entries and exits using data, and then finally exploring the idea of custom data points and how you could kind of go about using something that's custom, such as EMAs or certain time at like VWAP, for example. Now, I hope you enjoy this series, and I hope to see you in the next part. Be sure to like and subscribe and share with anyone that could be interested.